People in the East have woken up to this some time ago, but those of us in the Western financial system haven't woken up to this at all. And we're just beginning to think, well, what is going on here? Should I own gold? I don't own any. I better go and buy some. Sure, let's talk to someone, find out, And I'm finding that more and more people are basically coming, that they're following me on Twitter. I'm getting more and more people coming in for my Substack. And, the rate at which people are joining is sort of beginning to accelerate a bit. Whereas really in the second half of last year, things were very, very quiet.
Now we present the clips of Alasdair Macleod's insights from their recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pin comment. Stay ahead of the curve. Don't miss out.
We see that Trump has made statements that he wants the dollar to devalue. Well, do I really want to hold dollars? And if he devalues against the other currencies, what are they going to do? Are they going to go down with it or what? I should really, grab my gold, get it out of the American vaulting system. And then you get Scott Bessent saying, I want to set up a wealth fund, a US wealth fund, and gold will be central to it. Yeah, but hold on a minute. We all know that, you open the doors in Fort Knox, and it's probably all the IOUs will be fluttering out from all the leased gold, which hasn't been returned, hasn't been audited. What is the position? Now, going back to me standing for delivery, and I sort of think, hold on a minute. There's a guy called Roosevelt dealt with this in a way which is not very friendly. He basically confiscated the gold. So, if they find that all the gold's missing in Fort Knox, and for that matter in the New York Fed, where are they going to get it? Are they going to come to me for it? This is what happened way back in 1933. Individuals didn't give up their gold and gold certificates, no. But where they had it stored in the banks gave it up so that, you lost it. Which is why, when I was at Gold Money, we were always insisting that you've got to keep your gold and silver outside the banking system because it's just vulnerable. So, I think it's the uncertainties over, the potential exposure of the real true situation in terms of US gold. And also Trump running around saying, we want to devalue the dollar. Do you really want to hold the dollars? The answer is no. So you've got to hold gold. And I think that's why it's looking so good. And I think people in the East have woken up to this some time ago. But those of us in the Western financial system haven't woken up to this at all. And we're just beginning to think, well, what is going on here? Should I own gold? I don't own any. I better go and buy some. Sure, let's talk to someone, find out, And I'm finding that more and more people, and, the rate at which people are joining is sort of beginning to accelerate a bit. Whereas really in the second half of last year, things were very, very quiet. I have no doubt that there's a lot of gold missing in, from the US Treasury's stocks. You don't have 53 years of anti-gold propaganda, suppression of price and all the rest of it, without your own stocks going down very materially. And a lot of it was leased and has never returned. Hence, the sort of cynics would say that if you open the vault doors of Fort Knox, all you'll find is a sort of load of IOUs fluttering out. And that's about it. Officially it is 42.22. Now, that's what it is on the Fed's balance sheet because it has a note, as it were, from the US Treasury valuing it at that. Now, if they're going to revalue it, then I think you're going to get people like, well, certainly Ron Paul and Elon Musk are sort of thinking of looking at this. while people, I think, are very understandably scared that there may be another executive order confiscating their gold. It's not quite as simple as that, because when gold was fixed at 20.67, which it was in 1933 when FDR produced his order, it wasn't confiscation as such. I mean, this is a very, very legal nicety in this one. What you were being forced to do was to encash your gold at the official rate of exchange. 3 months later, the dollar was devalued by 40%. There's actually nothing to do with the legal position, if you like, of the enforced change. Nowadays, there is no gold standard. Well, there is at 42.22, but there's absolutely no way. It would be absolute uproar if Trump tried to do that. That would be definitely confiscation. I mean, plain and simple. Incidentally, I think Trump's idea of property rights is actually very bizarre. And this is another thing which I think will have frightened foreign owners of dollars and gold.
According to precious metals analysts at Heraeus, gold demand in China is showing signs of a strong rebound even as physical flows from the UK to the US continue. There are also indications that solar demand for silver may be peaking. Market expert Alasdair Macleod points out that silver has faced a supply deficit for 7 years, with China playing a key role in controlling its price. He suggests China has stockpiled large amounts of silver to keep costs low for industrial use. However, he believes this control is ending, and once silver surpasses $32.50, its price could surge rapidly. The future value of silver in 2025 will be shaped by a complex interplay of economic conditions. While it is impossible to predict exact prices, a careful analysis of these factors suggests that silver could see significant price movements in the coming years. Unlike past crises, Macleod warns that the Fed can no longer save the system by printing money without destroying the currency. He predicts rising bond yields or derivative market turmoil will trigger the collapse, ultimately leading to a banking crisis and a sharp decline in the dollar.
There is sort of some residual moneyness, if I can use that word, in silver. But I mean, silver's problem, I think, has been a little bit different from gold insofar as you've had about 7 years of a supply deficit. And the shortage has built and built and built. Now, I think the price has actually been controlled, particularly by China, which mines silver, quite a lot of silver. It's taken in dory from abroad, mines that. I think it's probably accumulated some quite large quantities of silver, and it doesn't really want to see the price up because it uses it as an industrial material. But I think that those days of control are probably coming to an end now. And if you look at the chart, which gives you the sort of, if you like, the psychology of it, I think once we get clear of this 32 and a half level, it looks like it could run actually very, very fast. I mean, behind it all, we've got the largest credit bubble in history. I mean, ever. Whenever credit existed, and it existed before money, legally, we haven't had a credit bubble like this. This one's going to burst, and when it bursts, it'll take everything down with it. There is no way in which this one can be dealt with. There've been, from the sort of mid-80s, there've probably been about 6 bubbles, of which this is the last, where each one has been prevented from imploding. Last one was what they call the Great Financial Crisis. What did the Fed do? Took out its checkbook and it wrote an open check, and it said, here you are, you have all the credit you want, just don't go bust. All the banks, insurance companies, everybody, here are dollars. You don't need to worry about it. You won't go bust. We will reduce interest rates so that the cost of them will be negligible for you. This time, they can't do that. If they try and do it, they'll trash the currency. If they don't do it, then there's going to be multiple bankruptcies. The Fed is in not a good position on this. It really isn't. When this bubble bursts, and I think it will be rising bond yields that do it, it could be financial disruption in the derivatives markets, which gold is the canary in the gold mine on that one. But absent that, I mean, I think once we get rising interest rates and the bubble goes out of equities, bearing in mind that equities, etc., are all collateral for the banking system, a collapse of that basically starts imploding the banking system. And you get those bad debts coming up. What does the Fed do then? Tries to reduce interest rates. What happens to the dollar? It goes down. So I think that's the way it's probably going to